of England announced new interest rates. Currently, they're around the 3% mark, 3.25, 3.45. So you weigh that against mortgage rates and stuff. And then on top of that, we look at actually understanding the area, because numbers are good, valuations are good, online valuations great. It gives you an indication maybe, but we like to physically be there and understand what's going on in the area, if there's any regeneration or if there's any crime or if there's any.
Welcome to the Property Podcast, where great minds in real estate get together.
Welcome to another wonderful podcast. And hello, Paul. How are you doing?
I'm very well, thank you. How are you doing?
Really good. Thank you very much. So let me introduce you to everybody. So for those who are watching, this is Paul Byrne, the MD of bineproperties.co.uk. Needs no extra introductions. You can check their website out. Amazing website, great reviews. Been in this business for around a decade. So let's jump in, Paul. How did you build your exclusive network of off-market deals?
When we started out, my brother and I started the business. We just wanted to do something different in the market. And I know that sounds cliche, but when it comes to property, you get all these so-called deals and properties flying about, agents selling, and sometimes people are not treated the best in business. So for example, if you're selling a house, maybe you want the full service, and we decided, okay, we want to be a consultant on that end and help someone throughout the deal. I'd even call that pro bono at first, just to have a test and have a feel of helping friends and family, and that extended to business. That's how we started.
Fantastic. Okay. Well, one thing that made me think that you guys are different in some way is that you've actually got, like, I think it's Trustpilot reviews on your website as well. Now that is very unusual, and I think it's a really super, like, it's a top-notch thing to have, because often people may go, to a business like yours, but they don't know how good you are. So, I mean, how did it happen? How come you got great reviews?
Okay, so thank you for pointing that out. I hope it's as good as you say. I think it is.
It is.
Yeah.
I confirm.
Okay, thank you. But generally, once again, it came down to the clients trusting us. And I know it's easy to say, but sometimes maybe someone had a bad experience with another company and they came to us to try and redeem or help. And we did. We went out of our way. Sometimes it's even beyond what we can do. It was beyond our remit. But we decided that we can help a lot of people. And then if we can potentially do business with them in the future, then that would be great too.
Yes, fantastic. Absolutely fantastic. And that shows, because, I mean, if you think about it, for someone to go out of their ways, especially in this kind of field, to actually write a review, that's a lot, because it's private stuff. So, that's definitely a plus. Okay, awesome. So I would say maybe, one of your strong points is, I guess, the personal touch that you're putting, really, isn't it?
Yes, exactly.
Okay, that makes perfect sense. Okay, so listen, I mean, what kind of trends are you seeing in 2026 in property market, and how do you think those are shaping your development finance strategies?
So in 2025, there was a lot of uncertainty with house prices in the UK and in general. We're based in London, but we do operate in the UK as well.
Okay.
And with prices, there wasn't too much, but generally the prices are growing. So we have a bit of an increase in price. With mortgage rates, I'd say prices are falling in the late 2025, which means it's better for borrowing. So mortgages or bridging loans or what have you, to purchase properties for investment or personal purposes, and for first-time buyers as well. So mortgage costs are down quite a bit. And then we have like this budget that was released, which caused a lot of chaos. Yeah, for the rental market primarily as well. So what I will say about that is landlords just need to be real careful about all the regulations in place. It can still work. You just have to know exactly what you're doing, and have an advisor next to you in every angle. But generally, property market is quite stable. Supplies are high.
Okay,
I'd say
good.
It varies based on whether you're buying it for living in or investment purposes. So yeah.
Excellent. That's interesting. Yeah, I was wondering about, the sort of political side of it, because there's been a bit of a turmoil, and especially for international investors, they're kind of looking at England going, okay, what is going on?
Yeah. And then if I can add to that, with
Sure.
the international buyers, because we vary our clients and our investors, we tend to have buyers who buy just the average home in London. It could be up to 400 or 500K, even less sometimes, depending where it is. And then we have the bigger buyers who could be companies or whoever, institutions, family offices. And what we're hearing from that side is that a lot of buyers are moving moving their assets, moving everything out of the UK because of
Yeah.
all this uncertainty and all the tax and all the reform.
Yeah. It's happening. God knows where they're going. Okay. So listen, you've pointed out something that I think is quite interesting. A lot of people that we interview, especially when we're talking about the luxury real estate market, tend to be based in London because especially for, international people, it's a bit like for Americans. If someone is not from America, you say New York. Obviously for England, you say London. But you've mentioned that you also work in other areas of England. So for someone who's not as comfortable with their geography, what other luxury investment areas would you say there are today in the UK?
Great question. You've got me ticking. So, because I love this. But what I will say is, for someone who just wants to get their foot into property and maybe they just got some capital that they want to put aside for property, I'd say London might be pricey for the average. Let's say, I don't know, someone even on minimum wage or something. So you would want to look in areas that are prime cities, prime locations. So Leeds, Manchester, sometimes Birmingham, Liverpool for sure. And that's assuming that you can achieve a great yield, so that's your rental income in comparison to the price, and then also achieving it at a good value for money as well. So you want to make sure you've got the property at a decent price, not paying too much or overpaying for a property. Once you've got those two in check, then you look at other options like refinancing, but it gets a bit poor today anyway.
We can learn out about that. Fantastic. And so you've obviously got your hands on, areas like that as well. So, okay.
Yeah. And how we work that, well, we're based primarily in London, but we do have a lot of partners and we have agents who reside in Leeds and Manchester specifically, actually. So that's how we can achieve some outcomes with that.
Fantastic. Really interesting. Thanks for that. And that's, and I've got to say, I think that's also probably a competitive advantage because I don't hear that very, very often. It just tends to be London, which is great, but obviously that's limiting to some extent.
Yes.
Wow. Awesome. Okay. So how do you, if I may ask, how do you assess risks for clients entering the market?
We look at various factors that are numerical, and we also look at understanding the market. And so everyone talks about macroeconomics. It's the microeconomic factor that we look at. And we look at the individual, and we look at the long-term plan for the individual or the group of clients or whoever we're talking about, conglomerate, right? So for example, if you have someone who's purchasing a portfolio of properties, maybe they want to buy 10 properties with us, we look at the tax benefit they can get from that. We look at, do they buy in an SPV, a company? We look at, things like inflation. You can't always predict that, but you can look at like when, for example, interest rates, they release, Bank of England announced new interest rates. Currently, they're around the 3% mark, 3.25, 3.45. So you weigh that against mortgage rates and stuff. And then on top of that, we look at actually understanding the area because numbers are good, valuations are good, online valuations, great. It gives you an indication maybe, but we like to physically be there and understand what's going on in the area. If there's any regeneration or if there's any crime or if there's any flooding going on, or if that corner of the road where the portfolio of houses, for example, there could be an issue, something that we can't see online so to understand at face value what we're dealing with. And then we assess that risk. But as you probably know, with any sort of investing, you have to factor in some risk. So there will always be risk with property. You never know what can happen. There could be a firestorm or tornado. Maybe not in London, but maybe
you never know. No.
Yeah. But generally that's how we look at it, and then we try to achieve the best prices for the client. Yeah.
Sounds good. Has finding off-market properties become harder, easier in recent times?
We'd say it's become substantially harder, not because of saturation, because I think that's easy for someone to say, but it's because finding a property off market. Okay, firstly, finding a property off market is not too hard, but finding a good property off market is quite challenging.
You got it. Yeah, of course.
Because you have to negotiate prices. It's all about the prices, and being off market only really matters once you start getting into, let's say, above 5 million, sub 10 million, but above 5 million. Once you get into that range, it really, really matters. Do you know what? I'd say 1 million as well. When you're around smaller, if you find it online, as long as you can't access it, then it's on market, but it's not really accessible. It's fine. We can sell it. When you get with the prime buyers, prime London or global asset or trophy asset, that type of range, it has to be non-accessible. To find that, it usually comes down to trust or the relationships. I even call it friendships with the right people, the right institutions, and the right businesses, so that they can trust you enough to handle some sort of assets and be mandated to sell that stock. So
Yes.
generally, it has become harder to find quality that's actually off market and we can verify.
Yeah, that makes sense. Yeah, yeah. It's and you're not the only one. I mean, we speak to a lot of people, and it's a general thing that is happening. So absolutely, internet has advantages, but also disadvantages.
Yes, yeah.
Okay, and listen, I mean, the kind of word in everyone's mouth now, the trend is AI. That's one thing that is obviously happening. There's some AI things that are good, some are bad. Are you guys implementing any AI features, or do you see any use in it, like predictive analytics, stuff like that? What's going on?
I'd say the AI that we've implemented in the business is primarily to do with how we process our data on our clients, or how we automate systems mainly. So for example, if we decide that, we want to create a package for an investment, some sort of appraisal, for example, buy this hotel at this price, and we have a whole package and we understand the numbers, we'd use AI for that to give extensive information.
Yeah, gotcha.
We already know, and we'd use it for our systems. We use various systems like Twilio and all these others, go higher level, HubSpot. We implement all these systems. Generally for AI, I think the next move, because I was invited to this invite-only conference. It was really cool. It was a global one, and it was to do with AI and implementing it into the transactional process when it comes to solicitors and all this, which is fantastic. And I'm all ears, and I'm happy for that. The only thing I can point out that could be an issue is that making everyone understand that that's how we're working now, and everybody can adopt that. And that's always been the biggest challenge, right? But before you know it, I believe that's what will be happening, because when it comes to land registry and the property market, things can be slow. It takes time for things to happen. And we just want to automate that and make it as smooth and as fast as possible. So yeah,
that makes sense.
Short, long answer on that.
Yeah, no, absolutely. And I think you're absolutely spot on. There's certain things that can be used already. Others depends on how the market is shaped. So some people are jumping on the wagon, others are kind of being more cautious, but there is definitely a use for it going forward. Okay, well, Paul, this was an absolute pleasure. Thank you so much for filling us in, and I hope to have you again on the podcast.
Thank you for having me. Thank you very much.
Absolute pleasure. Bye.